You probably already heard by now, but the 18th largest bank in the United States just collapsed, Silicon Valley Bank. And 3 days before it collapsed, they were actually mentioned in Forbes for being one of the best banks in the nation. And last week, I had a guest on the podcast that talked about how the banking system is so screwed up and how they're just lending out your money, and at any given time, they don't actually have your money in the bank. And so I actually took a clip from the podcast last week where he talks about exactly how to fix the problem. If you're watching the video, how you can take action and how you could potentially set yourself up for success as opposed to putting all of your eggs in the basket of the traditional banking system. So I'm gonna go ahead and I'm just gonna share a quick clip with you, and I really hope that you enjoy it. You obviously said something really valuable a little while ago, which was don't invest in things you don't understand, right? And the reason I love that you said that is because I think my generation is 100% guilty of, you look at like the GameStop thing, right?
And
AMC, right? Nobody knew any. I mean, there inherently wasn't even really much to know, but like everybody and their mom threw money in that, right? And a lot of them lost a lot of money, right? Obviously, So you hit the nail right on the head there. So then if they don't understand, maybe real estate, or they don't understand, like what should they do with their money? And then how much money do they need to start?
So they don't need a lot. I mean, like for what we do with the infinite banking, I mean, that's a good starting place because you can't start investing until you've built a foundation. Like, real estate.
Yep.
When you build a house, what's the very first thing you lay down?
You have to pour the concrete.
A foundation. You put a foundation. If you build a house without a foundation, eventually it's going to fall over. Yep. So a lot of people build their investment portfolio. They build their money house without a foundation. So the first thing you always have to do is you have to build a foundation. And one of the biggest things I teach is I teach people how to change just one thing. Literally, like, you want simple? There you go. Change one thing, and that is where your money goes first. Or just first start a foundation. So investing is an interesting thing, but if we don't change where our money goes first, we're always giving up control of our money. Most people, when they make money, they put it in the bank, and they leave the money in the bank because, that's liquid, it's safe. You gave up control of the bank. No, I didn't. I can take it back. Not true. During the pandemic, you couldn't just put money in the bank and take it back. You had to get permission. You aren't in control of that money, because if you were in control of the money, when you gave your money to the bank would have to call you and say, hey, Chris, I want to lend this money to Austin. He's going to buy this new Porsche 911. Like, can we lend your money to Austin? Did they call me? No, they just do it. I gave control to them to do that. And because I give up the control to the bank, and we'll hit Wall Street in a second, I gave up the opportunity to earn 400 to 1,300% more than what I do, because banks make 400 to 1,300% more than we do. And that is factual. Go to BauerFinancial.com and you'll see it. So then let's move to Wall Street. Let's move to investments. A lot of people are like, all right, well, what do they do? Well, my grandma told me when I was young, she said, Chris, when you get a job, the first thing you ask them, Chris, do you have a 401k? I'm like, all right, grandma, 401k, got it. I should write that down, 401k. All right, great. And then she said, but Chris, when you get that job, if they got a 401k, ask them if they match. Ooh, grandma, what's match? That sounds good. She said, it's free money. I'm like, ooh, I want free money. Match. So I got it down. The formula, 401k and match. So when I got that Wall Street job, first thing, hey, do you guys got a 401k? Oh, yeah, we got one of those. Yes. Yeah. Next thing, do you guys match? Yes. Double score. And I started putting money in the 401k. You know what I did? I gave up control of my money. I was 23. I can't use that money until 59 and a half. Dude, how much time did I just lose? Oh, but Chris, the money's growing in the market. Or it's not when it's going down. But it's still not in my control. So I gave up my most valuable dollars. Because listen, your audience needs to understand something, especially right now. Now, this is a $2 bill, but just whatever, make it whatever it is. This $2 is worth the most it will ever be worth right now. Tomorrow, it's worth less. The next day, it's worth less. If the Fed prints more money, it gets down even more. So your dollars are worth the most today. Yep. So why in the world would you take your dollars and give them to a 401k, give them to a financial advisor, put them in some brokerage account where it's just going to sit there and hopefully grow? We hope, a lot of hope, and that. Then someday later, 401k, 59.5, when we take that money back, we're so proud it grew, it doubled, it tripled. We take that money back. We're taking weaker dollars back. Not only that, but why did you put it in the 401k? Oh, grandma told me they give you a tax deduction. You don't have to pay tax on the money. Oh, that's sweet. Yes. Today is the lowest taxes I will ever hey, your tax rates are going to go up. We're in the lowest tax. So 59.5 comes 25, 10, 15, 20 years. I take that money out of the 401k. I get weaker dollars that are taxed at a higher rate. Who's winning that game?
And you had no
Not
control.
you,
Yeah.
because you gave your control up. And that's what you're taught in Wall Street. You're taught to do all the things that make people give control of their money up. That's what I did. I'm guilty. I did it for 16 years at a high level. Hundreds of millions of dollars through the firms I worked at. That's how much we managed. And all I had to do is tell people, give me control of your money because you're stupid. Give me your money because I'm smarter than you and because you don't know. And I'll look at these complicated algorithms. Look at this average rate of return we're going to get you, which is also a lie. Look at all these fancy graphs. Like, you could never do this. Like, you got to have me manage it. Folks, right here, right now, draw the line in the sand. You have to be a good steward of your money because no one cares more about your money than you do. So why do you give up control of it? I just teach people, take this money that you've got today, change where it goes first. It is in your control. And then let's just look at the smartest financial companies in the world, banks. Okay, what do banks do? They move money. They lend money, right? So I give that bank money. The bank then takes that money and lends it out. And they pay me 3% and they lend it out at 6%. What did the bank make?
5%.
Well, they made a spread of 3.
Right.
Because they paid me 3 and they earned 3.
Sure.
And how much risk did the bank take to do that?
None. It's your money.
A little bit, but not much.
Sure, yeah.
Right. It is my money. So, but they still have to, somehow.
There's risk.
We're not going to go there, because they can just go belly up and the government bails them out. But you get it. The bank used my money to make double what I made. And not only that, they took very little risk. And then they just do it again. The money comes back in payments. They send it back out. Then the money comes back in payments. They send it back out. And they keep doing this. This is how the bank does it. Why don't we just learn from that? Yep. Why don't we literally just take our most valuable dollars and just mimic the bank? Take back the banking function. Stop giving control to the banks. Do it yourself. Great. So I save money, but I change where it goes. And we'll talk about what this machine is. Now, see, I don't put my money in banks anymore. When I got money in the bank, these hairs on my hair stand straight up if there's a bunch of money in the bank. Some people are like, oh my God, look at how much money I got in the bank. I would say, you're stupid for having that much in the bank. But that's okay, because you don't know yet. Let's teach you. So I then take the money and I put it into my own bank. Now, we're going to talk about what my own bank is in this machine, but let's just pretend right now, I'm just going to tell you what my bank does that your bank does not. My bank pays me a guaranteed 3 to 3.25%, guaranteed for the rest of my life. No ifs, ands, or buts, and it never changes. Every year, I get paid a dividend on my bank. Yep, that's right. Every year, I get a dividend and guaranteed interest, about 5 to 6%, okay, depending on the company. Then my money grows tax-free. So when I put my money in my bank, that earnings that I did, no taxes. Wow. Not only that, I don't even need to report it to the government. It's 100% private. If somebody sues me because they slip and fall at one of my apartment buildings, they're not touching this money because it's protected against judgments and liens. And if I should die the next day, or I get in Devin's fancy fast car and we just test her a little too much and we don't make it, all right, that money that was in my bank is leveraged and doubles or triples to my family. So now my little girl, almost 3 years old, is taken care of. My family gets to maintain their lifestyle. Why? Because I changed one thing, and that was where my money goes. But now, let's have some fun with this. Let's just pretend this $2 is $2,000 bucks. Let's just use $2,000, right? I put $2,000 in my account. We already know what it's earning. We know it's earning it tax-free. We got all these great things. But now, I got to mimic what a bank does. And a bank moves money. Bank never leaves money sit. So I'm like, all right, what can I do with that money? I get a call from this guy, Austin, and he says, hey, man, I need $2,000. I needed to do this real estate deal. Yep. And I'm like, okay, I got $2,000. Austin, what are you willing to pay? And Austin says 12%. I'm like, cool. All right. So I take the $2,000 from my bank and I give it to Austin.
Yep.
I started with $2,000. I took $2,000. How much is left?
Well,
trick question, but what do you think your audience thinks?
The audience thinks 0.
Right.
But there's really $2,000 in there, right?
Correct.
Yep.
So I know that throws your audience for a loop. So remember, I started with $2,000, but now I just gave you $2,000.
How is there still $2,000?
How is there $2,000? So now let's define what my bank is. When I made that one change, I did the same thing that the Rockefellers, the Rothschilds, the Warren Buffetts, the Ray Krocs, I could keep going, the Pampered Chefs, the Doris Christophers. I could go through time. FDR, all of them did this, okay? I put my money in the oldest institutions that there are, and they are insurance companies. That machine where my money was is a specially designed, keyword, specially designed and engineered whole life insurance policy. And I know as soon as I say that, whole life, what? Yeah. And that's what I said when I first heard this as an advisor. I'm like, oh man, you just got bamboozled. That's a scam, man. Whole life's the worst place you can put your money. But the biggest problem in America is not what people don't know. The biggest problem in America is what people think they know that just ain't so. So how did I have $2,000, give you $2,000 and still have two? Because I didn't use my money. You see, the insurance company made two promises: a guaranteed interest rate. I already told you about that. And they promised a death benefit. That was that legacy. But they didn't tell me I couldn't use the death benefit when I'm living. Matter of fact, they're perfectly fine if I do. So that $2,000 I gave you wasn't my money. It was the death benefit they're letting me use while I'm living. Because, hey, I don't plan on dying today. So, hey, you can have $2,000 in my death benefit. And the insurance company just loans that $2,000 to me. Keyword, loans the money to me. So that $2,000, the insurance company is going to charge me interest. But hold on a second, folks, you got to understand compound interest. The most powerful thing in the universe, says Albert Einstein. Those who understand it, earn it. I'm going to show you how to earn it. Those that don't, pay it. Those of you.
Eighth wonder of the world, right?
Bingo, eighth wonder of the world. Well, whatever he wants to call it. Yeah, it's Albert Einstein. I'll listen to what he says. So I just gave you $2,000. It was a loan from the insurance company. They charged me simple interest on that loan. Let's just say it's 5. My money, let's just call it 6. Simple math. I'm earning 6. I'm paying the insurance company 5.
Sure.
What's my spread?
You're making 1.
1, right? 1%. What was the bank making? 3. So I'm not doing what the bank was, but I'm still making a spread.
Yep.
But now because I got $2,000 here, that $2,000 next year is $2,000 plus the 6%. So next year it compounds. Now I got more money compounding. So next year, same math. Okay, I'm still earning 6, but I'm earning 6 on a higher amount of money. So now I'm making a better cash-on-cash return on my money, but I'm still paying the same amount for that $2,000. My spread just went up.
Yep.
Next year, my spread went up. Next year, up. Every year for the rest of my life, as long as you keep my $2,000, for the rest of my life, I get a raise. And I didn't have to work any harder. I didn't have to work any longer. I didn't have to do anything different. It's mathematics, certainty. So now you're paying me interest on that. So now let's go to the second round. I want everybody to envision this. Picture a circle in your head. Okay, we got a circle. On the left side of the circle is where you're putting your money, specially designed and engineered whole life. We're going to take that money and we're going to move it around the top part of the circle. Okay. Over here is the opportunity. Austin, you're my opportunity today. You need $2,000 for something. $2,000, $200,000, $2 million, whatever it is. Okay. That's my opportunity. Now you're going to pay me interest. Because I got this really cool new banking system on the left side, which is this whole life, you pay me interest. Am I going to take that and give that back to their bank? Heck no, man. I'm going to complete the circle. On the bottom part of the circle is you paying me interest, and I take that interest and I put it back in my policy. But I put it back in my policy as a loan repayment. So now, not only am I earning a bigger and bigger spread, I'm paying that loan down with your money. So now my spread gets even bigger because the balance that I owe the insurance company is going down, which means I'm paying them less. I'm making more, and you're helping feed it. My money is in my full control. The circle is complete. It's like Apple's end-to-end control. I created end-to-end control with money by simply changing where it went first and following a process called the infinite banking concept, which is exactly what I just taught people to do. Let's go one more round, can I?
Yeah, of course.
So now some people are like, okay, yeah, but I got debts. Great. What's the minimum to do this? Take your age. I'm 45. Add a 0 to the end of it. Okay. $450. $450 a month would be my minimum. How old are you?
27.
Holy crap, you're 20. Dude, you are, folks, crushing it, man. He's 27.
I appreciate that.
270 is your minimum, okay? So that's where we got to start.
Okay.
If you can't do that, sorry, we can't help you. So now I start putting money into that specially designed whole life. But over on this side, my opportunity is not you borrowing money. My opportunities, dude, man, I made a lot of bad decisions. I bought those Gucci's, I bought those Nike SBs, I bought that Rolex, and I put it all on a credit card. The credit card charged me 20%, man. And I owe the credit card $20,000 and they're charging me 20%. I got to pay them $300 a month. How can I ever do this? How much can you save? Well, my minimum's $450. I could probably save $500. Great. So I save $500 a month. In a year, I got, let's say, $6,000 plus interest. So I then take the $6,000, I move it over here, and I pay off one of those credit cards. Let's just say one of them was $6,000. So now one of the credit cards is gone, and I paid that credit card $100. What I'm going to do is I'm going to be smart. I'm going to treat my bank's money the same way I treat any other bank's money. I'm going to be an honest banker. Since I paid off that credit card that I paid $100 a month, I'm going to take the $100 a month that I paid them, and I'm going to take that, and I'm going to just change the name on the check. Instead of writing Visa, Amex, or Discover, I'm going to write Chris Naugle or Chris Naugle's bank. And I'm going to send that money back over to my policy. It's the same dollars, right? I was giving $100 away. Now guess what I got? I got $100 every month more in my saving system. And now what else did I get? 20%. I just made 20% of my money. I recycled and recaptured the 20% I gave away. Isn't that the same as making a return? But it was risk-free. Now I just keep doing that. So now I take the $500 a month, plus I take the $100 a month that I'm putting in. It was new money that I just recaptured. I keep doing that. Now I move it back over. I pay off another credit card. recapture that.
Yep.
Do it again and again and again. And then I pay off my car. And my car was $500 a month. So now I recapture the $500 a month. And I just keep doing this until all of a sudden I got no debts.
Right.
But now all of a sudden I got $3,000 coming over to my bank every month, and I didn't have to work any harder. All I did is I got rid of all the holes in my boat. I got rid of all the debts. But I didn't cheat myself. You notice every time I paid off a debt, I took the money I paid that debtor and I put it back over here. I didn't make excuses. I was consistent and persistent in my actions. Because if I'm going to be a banker, if I'm going to BYOB, be my own bank, I got to do what the bank does. In the bank, if you owned your own bank, you wouldn't steal from your bank.
Right.
Ever. Dude,
it's so powerful.
So simple.
Why then do people have the misconception? Like, where does that come from? Is it bad sales guys out there? Yeah, for real though, right? Like, you know, where does it come? How come, you know, like even me, take me for example. I have your boy Devin right on the show. And dude, first time I ever heard about it my entire life. 27 years. And I've done a lot of, I've built 12 companies. I mean, I've done some cool stuff, you know, and so I've been around a lot of smart people in my life, never heard of infinite banking.
Of course.
Right. And then boom, here I am and I hear about it. I'm like, whoa, like, you know, like, and then immediately what are we taught, right? Growing, it's like too good to be true, right? It's got to be.
High term, and that's the difference.
Right. There's got to be, what's the catch, right? So like a lot of people out there watching right now, like they're probably thinking that if it's their first time hearing you talk about it, they're probably thinking the same thing I was thinking the first time. Now, obviously, I trust Evan, so I wasn't thinking it was too good to be true, but that was my natural instinct, right? So then what do you say to them? Like, what do they got to do to wrap their brain around what you just said?
It's not easy. So I don't want to tell them what they got to do to wrap their head around.
Sure.
Let me just tell them why they don't know about this. And I'll tell it from personal experience. I spent 16 years in Wall Street. It was 14 years in Wall Street. I never knew what infinite banking was. Heck, I didn't even know you could design a whole life the way that we do, where it provides instant liquidity of your money. I had no idea that even existed. And I was an advisor. I knew what whole life is. I sold it. You know how I sold it? It's an expensive life insurance policy. Sir, ma'am, we should only buy whole life for that burial policy because we want to make sure that if you outlive your term insurance, we've got policies in place that will pay for that funeral and the final expenses. But we're going to use term for the rest of that. And then you're just going to give me the term, the difference between the whole life and the term, and I'm going to invest that. And I'm going to charge you 1% to 2% on that money, right? So why don't people teach this? In order for me to do what I just said, and I did say this several times, it is a specially designed and engineered whole life. Me, designing the whole life for you, I have to take a 60 to 90% cut in my pay. So now let's frame this up. Why didn't your advisor tell you about this? How come your brother-in-law, your broke-ass brother-in-law, how come when he tried selling you life insurance, he didn't tell you about this? Well, number one,
he makes more money not telling you.
Yes. So if you do a regular whole life, let's just do the math, a whole life or an IUL. If you put money into whole life, let's use 10 grand. Okay. What do you think my commission would be on a regular whole life policy? Not the ones I'm talking about, but a regular one.
Couple grand?
$5,500, 55%. So that's not a bad day in the office, right? I go in, you give me 10 grand, I make 5,500. Man, I am partying. Okay. You put that money in an IUL and there's a chance that 10 grand just turned into 12 grand for that advisor. Man, he ain't coming to work all week.
Yeah.
Anyway, so why is this different? Well, in order for you, so what I didn't tell people is you can put money in this policy and you can have immediate access to 60, as much as even 85% of the money in the first 30 days. There isn't a whole life in the world off the shelf that works that way. So we had to take one from the banks. Now, if you really want to know, study BOLI, B-O-L-I, bank-owned life insurance. Banks don't buy the same life insurance we do. They design it with the insurance companies. We just figured out how to do that. So when we designed the policy, we actually take one from Dave Ramsey. Dave should send me a thank you letter. Dave, where's my letter, buddy? Send me my thank you letter and a box of chocolates.
Come on, Dave.
You say buy term, you love term because it's cheap. I love term, Dave. So what we do, Dave, is we take that whole life that you so hate and we strip that whole life down. We take all the death benefit and we take it away. But you see, to put money in a whole life, the IRS says I got to have a certain amount of money in death benefit to support the amount I'm putting in. It's called a MEC 7 pay. So if you want to put 10 grand in, and I'm going to strip the death benefit down because I don't want to pay the insurance company, well, I got to find some death benefit so that I can put that 10 grand in. Dave, I called up that term insurance company. I said, hey, man, give me some of that term. And I put a term rider on it. So the majority of the death benefit is term. But that makes my policy super efficient. Because I got money going in, earning a guaranteed interest rate and dividends. I got a really low cost of insurance. Now I got a policy that has instant cash value, has a fast growth pattern, allows most of my money to work for me because my costs are really low. And the only differentiator there, I got to take 90% less in pay. So try that with your brother-in-law. Go to him and say, hey, buddy, I want one of those whole lives. He's going to be like, oh, man, yeah, I've been waiting for this day. And you're going to be like, yeah, I want a big one. I got $100,000 I want to put into that whole life. Dude, if he doesn't fall off the chair, you're lucky. He's like, oh, yeah. All right, I got the paper in my bag. Where's my bag? All right, here's the app. I'm ready. All right, wait, brother-in-law, hold on, man. I need you to do something, though. No problem. What do you need? I need you to design it so that you make 90% less, and I have 90% more to use today. Can you do that? Oh, man, they don't allow that. No, I know they do. Brother-in-law, I'm asking one more time. I need you to take 90% less. I need you to design it so that you make 90% less so that I can have 90% more. What do you say?
Right.
Now, we put him on the spot. He might do it if he knows how, but he has to know how to design it within the MAC rules and do it so that it works the way we do. Very few people know how to do this.
Yep.
So advisors don't tell you about this because ask any advisor. Hey, you want me as a client? Great. I need you to make 90% less money. No way.
Right.
There's nobody that wants to work for 90% less. People are probably watching this saying, well, yeah, Chris, why do you do it? Because I figured the secret sauce out. Remember I said the laws, if you give, you get. I'm giving my commission up so that you get. And guess what that turned into? Over 7,000 clients in the United States. So even if I make 90% less, do the math, 90% less times 7,000, I think I'm doing okay.
Yeah.
But I'm serving people.
Volume game, yeah.
I'm serving people. So it all comes back to those 6 laws of wealth. And it's a simple circle, and all you had to do is change one thing. Folks, I don't understand why people don't use this. I don't understand how they can even think it's a scam. It's a freaking insurance policy used. Everything I just explained is not about the darn product. The product's just designed and engineered. Everything I just explained on how you build wealth is a process.
Sure.
It's moving money. It's finding opportunities and being honest with your money and with your own self. That's it.
That's all it is.
Sorry I went long on that, but man.
No, you're good.